Cyberattacks, natural disasters, system outages. These aren't just hypotheticals. They're real-life threats that Canadian financial institutions face every day. In 2023 alone, Priority 1 cyber incidents nearly tripled in our major banks. And when operations go down, customers, markets, and trust go with it. So how is Canada responding? Enter the OSFI Guideline E-21, a new set of expectations from the Office of the Superintendent of Financial Institutions that's reshaping operational resilience across the industry. If you're in banking, insurance, or risk management, this video is for you. First, let's talk about OSFI. The Office of the Superintendent of Financial Institutions is Canada's federal regulator for banks, insurance companies, and pension plans. Their job? Safeguard the stability of the financial system and the interests of depositors, policyholders, and pension members. One of OSFI's key tools for doing that is issuing guidelines like E-21, which sets clear expectations around how institutions prepare for and respond to disruptions. Operational disruptions are no longer rare. They're routine. Remember the CrowdStrike outage? It shook industries. Or the massive ransomware attacks we've seen across the financial sector? OSFI's E-21 guideline is a direct response to this evolving risk landscape. It's not just about cybersecurity. It's about ensuring your institution can survive and thrive through any disruption, digital or otherwise. We're talking cyber attacks, yes, but also natural disasters, different type of IT outages, and supply chain failures. The cascading effects of these events can devastate customer trust and destabilize financial markets. E-21 aims to change that. Operational resilience is the ability of an institution to prepare for, adapt to, recover from, and learn from operational disruptions. Under E-21, institutions must be able to identify critical operations, assess internal and external threats, establish clear recovery strategies, test and improve continuously. This is not just IT's job, it's enterprise-wide. From the C-suite to business continuity teams, everyone has a role. Guideline E-21 is structured around 4 strategic pillars. 1. Resilience. Design systems and processes to absorb shocks and continue operating. 2. Risk management. Identify and control risks that threaten operations. 3. Compliance. Meet regulatory obligations and standards. 4. Crisis management. Be ready to respond decisively and transparently in high-pressure situations. It consolidates and modernizes OSFI's previous operational risk guidance. Institutions are categorized as either 1A or 1B depending on complexity and size, with scalable expectations for each. Whether you're a Big 5 bank or a smaller trust company, this framework is designed to work for you. If your institution is federally regulated in Canada, this applies to you. That includes banks, insurance companies, trust and loan companies, basically all entities under OSFI's watch. OSFI has provided a phased timeline for implementation. This gives institutions time to evaluate existing systems, make necessary upgrades, and align policies with E-21 expectations. Staying ahead of the compliance curve isn't just smart, it's essential for operational credibility and client trust. E-21 is Canada's answer to the EU Digital Operational Resilience Act, DORA. While DORA focused heavily on ICT risks and digital continuity, E-21 takes a broader view, covering everything from IT and cyber to business continuity, third-party risk, data management, and crisis response. This is more than regulatory checkboxes. This is about building financial institutions that are agile, responsive, and prepared for a world where disruption is the new norm. By embedding E-21 into your culture, you're not just protecting your client system, you're protecting the reputation and reliability of Canada's financial system as a whole. Here's what institutions should be doing now. Conducting a gap analysis against the E-21 guidelines. Revisit their business continuity and disaster recovery plans. Update third-party and vendor risk assessments. Ensure executive accountability is clearly defined. Build awareness around the organization. And remember, resilience is not just a project, it's a practice. Operational resilience isn't just about surviving the next crisis. It's about building a future where the financial system never misses a beat, even when the unexpected strikes. If you found this helpful, don't forget to like, subscribe, and drop a comment below with your biggest operational challenge. Let's keep this conversation going. Until next time, stay confident, stay resilient.